Heidi ho, everyone, and welcome to this version of a weekly Sunday market update. It's wonderful to have you on board, and I'm glad you could join us. New format, of course, for the 2023 season, and you're going to have me for a half hour, which means, of course, I'll be able to explain in far more depth exactly how I approach the markets, in particular from start of the week point of view. But today I'm going to show you exactly the candle patterns that I'm looking for early in the week, and I'm going to explain those after I've given you exactly what I'm looking for the week ahead. So let's get stuck in, and hopefully you can glean something of what's inside my head as the week begins or as we get into the new week. All right, we're going to start with what I call game changer bars. Now, it's the game changer bars that I'm going to explain in depth a little bit later on after I've given you my analysis for the week ahead and what I'm actually looking to trade from this point forward, given that it is Sunday and we're looking for I'm looking for a whole new direction next week compared to perhaps what was brewing last week. Whatever may be, I refer to what I call the game changer bars. Now, really, they're actually key reversal bars. Now, if you're not familiar with that term, I will give you a full explanation as to what a key reversal bar is a little bit later. My version, slightly different to conventional wisdom, if you know me, you probably recognise that trait. Righto, first of them this week is Aussie Swiss. Now, the reason Aussie Swiss is a game changer bar is because it's telling me to go in a southerly direction or sell Aussie versus the Swissy. Now, there's a whole lot of context that I'm going to go into a little bit later as to why you would or would not take that as a trade or B, as a directional candle. In other words, what direction you're looking to trade for that particular week. Now, I would choose not to trade this short, and there are a few reasons for that. One of which, of course, is we're not actually in a game changer position, in my humble opinion. Game changers are just that. Key reversals are just that. What is this reversing on the weekly chart? It's not reversing anything. It's suggesting continuation, isn't it? So for that reason, it's not a game changer bar for mine. So I would ignore that at this point. Do I think this can go lower? Of course I do. But that doesn't mean it's a game changer bar that I want to trade, because I think the most relevant level here on the chart is that one there. And I believe as soon as we hit that, we're going to see a higher low and see this move to the upside. So I'd be going completely against my bias, as well as completely against what I consider the actual game changer bar to mean, or the key reversal bar to mean. And that is just that. Changes the game. And this is not change. It's not indicating a change of game. It's indicating to me that this will continue, at least for a short period of time. So it's a no. Easy peasy. CAD Swiss. Pretty much in exactly the same scenario. It's barely a game changer bar. In fact, it's probably not a game changer bar. I don't know why I've thrown that in there. Well, I do, because I'm dead set keen to trade this long, but I'll get rid of that. It's not a game changer bar. But the next one it's Euro Aussie. Euro Aussie suggesting that we do go long. And I'm not against that in terms of the position. Is it a game changer bar? Is it going to change the direction the market is going? Well, we're in a range at the end of the day, but we are coming off a strong support level. So I get that part. What I don't get is that we're trading straight into resistance once again. And of course, the game changer bar has to be not only a game changer bar on the chart. In other words, the momentum is changing. Is this changing momentum? There's no momentum here in my book. So again, that's a no. It's interesting, however, and I'll get into this a little bit later, because it is a dead set range, and I love to trade ranges. Would I trade that long into the top of the range? Answer, no. But when we get there, I'll be looking for something that suggests to me that we can go in the opposite direction. So whilst I'm looking for directional bias with these game changer bars, I certainly don't see it there. EuroCAD is next. EuroCAD a little bit different. We have had a strong move to the upside, which is clear on the charts. Bit of a retracement, bit of a top, and then a sell-off. This is now the question mark. Is this going long, or is this momentum changing? Good question. I can't answer that right now. The game changer bar is suggesting that we do go long, and this is far more in the criteria that you would accept for a game changer bar, in that we have had a retracement. So is this going to change the game and go back to trend? Perhaps, maybe, don't know. But that's the indication that I'm getting from that candle. So what I would do in that situation is not trade it long, not trade the candle long, but wait to see what happens on, say, a daily chart and see if we can get something that makes sense. In other words, maybe you could suggest we've got a double bottom here. Maybe we pick up a higher low and we can look to trade it long. Maybe we're coming off the bottom of that range as well. So that's probably the direction that I want to trade. But do I want to jump in here, trading straight into the monthly pivot? Answer is going to be no again. But that's the whole key with these game changer bars. They're not suggesting that you actually trade right now, but they are suggesting that directionally during the week at some stage, we're going to take on these, the high of that bar at least. So maybe a retracement, maybe we can look to play it long, maybe. It's certainly on the watch list for that reason, but it's not a trade for me at the moment. Euro Kiwi, again, a game changer bar or a key reversal bar, if you like. Is this changing the game? I don't believe it is. Again, this looks to be a continuation candle to me, not a reversal bar. It's a reversal on the previous day, or previous week rather, no question. But the momentum is very clearly to the upside here, and it's not in my playbook to actually trade these big bull bars long. But again, directionally, I see there's a chance for this to go long, certainly to take on these highs. And if I were to get a pullback on the daily chart, for instance, then I would consider most definitely trading this long. You can see that we've potentially gone into trend off break of this range. Higher high, higher low, higher high. Why would I want to jump in there? I wouldn't. I'd want to see a retracement, right? So retracement back to here makes perfect sense. Directional bias kicks in, goes with trend, and that would make perfect sense. So yes, I'm on board with the direction. Am I on board with trading the bar? No, I'm not, most definitely. There are circumstances, of course, where I would trade the bar, and I'll get to that a little bit later on. I'm going to give you a full explanation as to what these game changer bars actually mean in context and how you can, and I've got a great couple of examples for you as to how you can take advantage of it, particularly in trend. The euro, massive trend since it turned around in 2008. And of course, the S&P 500, same story. And I'll show you how those game changer bars can get you into the market and build a position. And we'll do that after I finish my analysis. Pardon me. So that's Euro Kiwi. The last of the game changer bars is dollar CAD. And dollar CAD suggesting that we do go long. Again, bias-wise, in terms of direction, I can't fault that, given that we are at this, what I would consider to be a fairly strong support level. It's been a lot of resistance in the past through here, support through here, resistance here, support here. So it's a level that the market recognises, 1.33 basically. And we're back here again after that tumultuous skyrocket took off. And since we put in a lower low, we put in a lower high, now we put in a higher low. Interesting, right? Bars suggesting that we go long. And I've got to say, there's a very clear descending triangle. Well, to me, it's a very clear descending triangle. Some people would argue with me, and that's okay. Let me show you what I'm seeing. Come here, a pen. That's a mouse, not a pen. There we go. So flagpole's not great. There it is. But there's your triangle. Now, what that means to me is not necessarily that the price is going to go south. descending triangle, yes, conventional wisdom would suggest that this is going south, or to hell in a handbasket, if I can put it that way. But what I would suggest to you is that this is a market structure, like any other market structure, and it will either produce a breakout to the high side or the low side. And I don't believe that there's a definitive method of saying, okay, well, it's descending, so we're going short. I don't subscribe to that theory. What I do subscribe to is once the level is broken, so if it's the hypotenuse, if you like, of the triangle, gee whiz, it's taking me back to school, then I would suggest one of two things will happen. It'll break and retest there, in which case I'd look to trade long, or it would break it and come back underneath it and retest it from below, in which case I want to trade it short. The problem with that, of course, is that I'm trading straight into support. So there's nothing clear here to me right now on US dollar versus the CAD. So for that reason, I would leave it alone. So not unusually, if that's a word, I don't have a definitive trade as yet on the weekly game changer bars. So what do? Well, I wait until those directional biases maybe play out on Monday, Tuesday, Wednesday. Doesn't matter when, but those are the ones I'll be watching, and therefore they're highlighted on my market scanner. What I would then do is go and have a look at what news may or may not affect those positions during the week and when I might expect the market to move. So, and I won't dwell on this. Really what I'm looking for over here is something that is disparate, if you like. In other words, what I'm looking for is, let's say, a forecast number way, way greater or smaller than the previous month or week or whatever I'm looking at. So in this case, we're looking at, I think, their monthly figures. We'll just check that. Release monthly, right? So they're monthly figures. So what I'm looking at is the previous month, 47, 47.5. This month, no big deal, right? There's no big difference there. But if, for instance, we had something like, and I can't see one off the top of my head, but the closest would be probably this one. So the previous month was 16.9. So this is economic sentiment in Germany. Is it going to affect me? Probably not, but I'm giving you an example. That 16.9, they're expecting 22.8. What does that mean? That means to me that if this was a red-hot news event, I'd be looking probably to trade that particular scenario. In other words, if this was good for the currency, then I'd be looking to take a long position into that news, because the market would, if it's long enough out, if it's far enough out from the announcement, the market would generally, in that circumstance, have a bias towards the upside, given the number is predicted to be better. So that's what I'd be looking for here. Not necessarily looking to guess as to whether, the CPI out of Canada is going to be a massive number. But if the economists are saying that it is, then the market's going to react to that. If it's minus 0.5, then there's no big deal. It's not a big change. But if it was 1.2, for instance, then you've got a bias. You've got a directional bias based on a potential number. So therefore, I'd marry that with the New Zealand cash rate. Yeah, that's probably the biggest news of the week, Gary. I agree with that. Tip to go 0.5% or another 0.5%. Is everyone doing that? Most people are doing 25 basis points at the moment. So if they actually do go half, that's probably going to be good for the Kiwi. Probably going to be the Kiwi. My goodness me, they're having troubles over there in the Shaky Isles, that's for sure, with floods and earthquakes. And not earthquakes, sorry, that's in Turkey. Wow, that's terrible. And all sorts of things going on with storms over there in Kiwiland. What that does, I'll leave it up to the fundamentalists how that works. But New Zealand cash rate is tipped to go a little bit higher than most are going at the moment. So maybe that's good for the Kiwi. And on that basis, you'd probably be looking not to sell the Kiwi, let me say. And I think that's probably the best way to approach that. If it was tipped to go to 5.25, then you'd probably want to buy the Kiwi, I would suggest. Anyway, that's the kind of thing that I'll be looking for from that chart. But certainly If I wanted to get into the market on, say, CAD Swissy, which I do, then I'd want to get into the market before that announcement is made, or certainly look for the reaction and then the considered reaction after that news event. Anyway, let's get back to the charts. So that's what I'll be looking for to marry those game changer bars, if you like, so my directional bias with potentially what's happening in the news. Outside of that, I listen to Ash on Mondays during Trading Buddies, because he fills me in on exactly what the commitment of traders is and the seasonal biases are and all that sort of stuff. So anyway, that's my analysis for the week. Not done, but I then go back and go through every single currency pair and look for something that attracts my eye. And that probably is going to be a range or something that's reached the top of its run or the bottom of its run. So reached a major support level or a major resistance level. And I come up this week with 3 on my watch list, and the first of them is Aussie CAD. I better get through these rather rapidly, otherwise I'm not going to give you the full explanation of what a game changer bar is and how you can use it. So Aussie CAD, reason for Aussie CAD, and look, I'm an Aussie fan. Yes, I live in Australia, but that's not why I'm an Aussie fan. I think the Aussie's got reasonable economic data, or has it? We'll see in the coming couple of weeks. But the RBA is under a bit of pressure. The governor of the RBA is under a bit of pressure because the government, in their infinite wisdom, suggests that he's raising interest rates too aggressively. Really? Everyone else is going a little bit harder than he is. But anyway, that's the kind of scenario that we've got over here. So I'm suggesting that the Aussie may be outstripped by the CAD. How do I come to that conclusion? Well, let me show you how I come to that conclusion. I actually use, and this is straight out of Lloyd's playbook, really. I use the indexes. So if I look at the Aussie has, to my mind, come under support, so under that support trade line, and is looking to go south. 1, 2, 3 days in a row, 3 weeks in a row have been bearish. So I see this travelling back to this level here, 66.90. And that's just a snapshot I take of the Aussie versus all the rest of the currencies, all the major currencies, right? Then I'm going to look at what's the pair I'm looking at, Aussie CAD, right? So I look at the CAD, not dissimilar, but only 2 out of the last 3 weeks have been bearish, and it's sitting on the support trade line. So the way I look at that is perhaps the CAD has got room to rally, not for a long way, but certainly back to here. Again, we see that ascending triangle coming in. So for that particular scenario, I'm thinking, okay, the CAD's going to outstrip the Aussie for the week. That kind of works with this theory, where the Aussie versus the CAD has come off a resistance level, that being the top of the ascending broadening pattern, if you like, come back underneath this trade line and has now retested that trade line. So I've got, and if you want to throw another one in, you can throw that horizontal level in, right? And we're below that horizontal level, have retested it. So everything that I see is suggesting to me that the CAD will outperform the Aussie for the next week. Now, it's presented me with a beautiful candle to trade here, and barring a big gap in the market in the morning, I'd be more than willing to place an entry underneath that bar and put my stop loss above the monthly pivot. It is a stretch in terms of a big risk in terms of candle size, 160 pips. But look where my target is. My ultimate target's down here, 700, 800 pips away. So, 3, 4, 5 to 1 is potentially available if that goes where I can consider that it may. And that, of course, is down to this level here, which would really fill in that range for me. So I consider that to be my number one watch list for the week, Aussie versus the CAD. And like I said, if there's no massive gap in the market in the morning, then I will place an order underneath there with my stop loss above the monthly pivot. Second on my watch list this week is actually pound versus the dollar. Reason? Well, you can say not dissimilar to what I've just described on the Aussie versus the CAD, but totally different chart pattern, if you like. Massive, massive. It's considerable support level that we've hit here. And I know somebody's going to say to me, the structure is an inverted head and shoulders here, and I totally see that. Left shoulder, head, potential right shoulder, potential second right shoulder. But the way I see this, yes, that's possible. That's entirely possible. But the way I look at this is we've come off that resistance level. We've come underneath this support level. And if you look across here, that support level is not insubstantial. Insubstantial, unsubstantial. It's bloody substantial, let's put it that way. Therefore, again, there's two ways to look at this. This could be a false break of that level. So we've broken it, we've come back above it, and we've retested it. The way I'm looking at this is that's entirely possible. And if that's the case, price is just going to take off here. If it's not, however, then I've got a double top sitting here and a lower high off that resistance level, which has brought me back underneath that former support level, this one here, remember? So I'm back underneath there. And this is what I like about that. What I like even better about that is it's broken my support trade line and retested it with a massive bullish bar, bullish engulfing bar, game changer bar on the daily chart. Now, do I want to trade that long? No, I don't. I want to trade it short. And once again, if there is no massive gap in the market in the morning, again, I'll place an order underneath here with my stop loss, the weekly pivotal move. I won't go up that high. I'll probably just use the bar, right? So I'm playing this as a potential A, B, C, or if you like, break of a neckline, retest of a neckline. The danger level is right here. If I can get through that level, then I think we're on the way probably down to here somewhere. And that's good enough. It's 2 or 3 to 1 or even better. Would I take profit there? I think so. I think I'd get, one of two things. I'd get myself safe in the market, most definitely, because I can't trade through that level without doing so. I think that would be reckless. So I think pound versus the dollar is absolutely on the cards. If we go and look at the dollar, and we need to put all of these things into context, what's the dollar doing? Well, the dollar has done exactly as anticipated. And once it broke this trend line, or trade line in my case, then it's gone straight to this horizontal level, which is about 104.50 in that vicinity, and has come back off it. Hasn't come back below the trade line, however. So I'm considering, has this got anything left in it? We'll retest that level before it goes short. Maybe it will, but it is above that trade line. And it is above, most importantly, that horizontal level of 103.55. So the retest here is interesting. This could go and hit the next level, which is around there somewhere, 105.60, let's call it. So what does that do to pound versus the dollar? Well, it puts that back here, right? So exactly what we've seen on the dollar index, break and retest to the high side. We're seeing on the pound versus the US dollar, break to the low side, retest. I think that's an excellent opportunity for this to go right down to this level and maybe even beyond. We'll see. So that's definitely on my watch list. The last one that's on my watch list is Kiwi versus Swissy. Now, the reason Kiwi versus the Swissy is on my watch list is because of my symmetry, my love of symmetry. Now, this is a little bit tricky, and I certainly wouldn't be trading it at the moment, but I really want to see what happens next here on Kiwi versus the Swissy. And the reason is, if I go to the weekly chart, I've got bang, 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 3 hits in a row, but I've also got a very strong support level that we've just hit. If you have a look through here, it's strong support. If you go to the monthly chart, you can see how strong that support actually is. So I'm expecting a bounce here. And as Gary pointed out earlier, the Kiwi cash rate comes up. Is it Tuesday or Wednesday? I can't remember when that was. So I want to get ahead of that game here. And if the Kiwi cash rate comes out in favour of the Kiwi and I'm actually in a long here, then this support level that I just pointed out on the monthly chart means that we've got an excellent opportunity to pick up some good cash. So that's why it's on my watch list, Kiwi versus the Swissy. If we can trade this back to here or look to trade this back to here by whenever that announcement is made, get ourselves safe in the market and we actually smash through that former support level, happy days. We'll be in a really good position. If it's not the case, so be it. We're safe in the market, doesn't matter. And that symmetry factor actually plays out and brings us back down to here. Either way, we may even get the signal to do that with a break and retest. I don't know. But that's why it's on the watch list. I need to pay attention. Righto, so that's what I'm looking to trade for the week. I'm now going to give you a pretty quick explanation on what a game changer bar is and how effective it can be over time. Now, when I mention a game changer bar, you will notice I always look to the bigger picture. And the bigger picture really tells me if that game changer bar is actually valid to trade or if it isn't valid to trade. I'm going to show you a reason why it is on the euro versus the dollar. And I'm also going to show you that it's also effective on the indices. I'll use the S&P 500 for that. So let's go and look at the euro versus the dollar. Actually, let's do a bear chart. It'd be far easier to do, or for you guys to see. Template. Let's go with a blank template. My blank template. There we go. And let's go and have a look at what happened in the last, let's say, since 2000. Why? Why do we go there? Well, because I think it's the most dominant part of the chart. When I look at a chart, I need to go back into time. So I need to go back and have a look at what drove the market when, and is it still under that influence? Is the market still under the influence of that particular, whatever it was? In this case, what do I see? Well, I see a downtrend. What caused that downtrend? Double top, lower low, lower high. That's where it happened. That's where it began, right? So when I see that, I immediately look, and I'm talking reversals, right? Once we see that reversal, and it can happen on any chart, but I like to see the big picture. The big picture is telling me that the monthly has said that the market has turned from this bullish into this bearish scenario. Massive bullish up to here, right? No question. And we go back and have a look at that, and it'll be exactly the same exercise. But here, that double top put in place drove the market down. Okay, it wasn't the double top that did it. It was Brexit that did it. But the fact is, the market gave you a signal that there was a double top there. Then it gave you a lower low. Then it gave you a lower high. That's when we start to pay attention, right? And that's where game changer bars kick in. So we don't trade on the monthly chart as a rule. But what we do is once we've seen that happen, we go down to the weekly chart. And this is where I start my week, right? So I'm going full circle here. Well, I hope I am. And I hope I'm making sense. So I'm back to the beginning of the week. And here we are. There's that lower high, right? And what am I looking for? I'm looking for a game changer bar. Have I got a game changer bar demonstration? I don't think I do. But this should clearly illustrate what a game changer is. It's key reversal bar, right? What's a key reversal bar? A key reversal bar, in my book or in my neck of the woods, is a bar whose, in this case, if we're looking to go short, whose high is higher than the previous. Now, let me show you that. So we've got our double top, right? We've got our lower high. We've got our lower low. Well, here's our lower low here. As soon as we see that lower high, we're looking for game changer bars. And look what served up at that level. A game changer bar high is higher than the previous candle or bar and closed on or near its low. Does that qualify? That one there? No, it doesn't, because it didn't close near its low. Does that one qualify? I'm not sure if it's actually higher, but it's pretty much it's equal. So that's, let's say, well, let's measure it. Let's not bullshit. Let's measure it. I don't know if it is or it isn't. High is 151.44. High of this one's 151.41. So it's not, right? It's not a game changer bar. So I can't do anything there. But I do note that that is now my lower high. Now, what happens? Remember I said earlier that a game changer bar has to change the game. What does that mean? Well, it means it has to change the direction in which the market is traveling. Did that do that? Yes, it did. Was it a game changer bar? No, it wasn't. What direction is the market heading through that period of time? And where are we looking to go? We've got a double top, we've got a lower low, we've got a lower high. What direction are we looking to trade? Short, right? Momentum is to the upside. So we've got a retracement on our hands. And here's where you now have to pay attention. You get a high higher than the previous week. You get a low closed on or near its low. That's the key. Is it relevant every single week? No, it's not, because, like I said before, you're not, where is one? Here's one here, right? That's not changing the momentum. The momentum here's to the upside. You get a game changer bar that closed near its low, you'd trade it. But you wouldn't trade this one. Yes, the high is higher, closed on or near its low, but what game is it changing? It's not changing any game. It's a continuation, right? So you wouldn't trade that one. But this one here is clear and absolutely what we're looking for. You've got your directional bias. It's short, higher than the previous high, closed on or near its low, trade it. Momentum changes, goes to the upside. High, higher than the previous candle, closed on or near its low, trade it. This one, high, higher than the previous one, closed on or near its low, trade it. Momentum swing. Is that a game changer bar? No, it's not, because the high isn't higher than this one. We've swung around, right? Or have we? Are we still in the same direction? We're still looking for the same direction. Nothing's changed. We don't have a double bottom here. We don't have inverted head and shoulders. We don't have anything that's suggesting that anything's changed. We're still in a downtrend. High, higher than the previous, closed near its low, tick, trade it. Up here, game changed again, higher than its previous high, closed on or near its low, trade it. If you missed that one, here's another one, higher than the previous high, closed on its low, trade it. If you missed that one, higher than the previous high, closed on or near its low, trade it. Here's another one, closed on or near its low, bang. This is why I have game changer bars on my menu each and every single week, because once the market is moving and once you recognize that, I mean, this looks like a range, right? Everyone would say that's a range that we're in. But the reality is, if you go to the monthly chart, the big picture is telling you, screaming at you, that we're in a downtrend. And whilst ever that's the case, once you see that big boss, as I call it, every time you see a rally and you get a game changer bar, that's when you want to pay attention. That's when you want to be trading. Look at them. You know, this is the monthly chart. Look at that. Big rally, game changer bar, trade it. Big rally, game changer bar, trade it. Big rally, game changer bar, trade it. They're there. Okay, S&P 500. Let's see if it works on the S&P 500. Massive, massive, massive on the S&P 500. You can't make this stuff up, really. Let's go back to the turning point. Where was the turning point? There you go. There's your double bottom sitting there, right? So you got a double bottom sitting there on the S&P 500. How rich would you be if you had put $1,000 on the S&P 500 there, put your stop loss there, and rode it? Oh my goodness, you'd be doing okay, right? Could you have ever envisaged that would happen? Maybe I didn't, because I'm not in it, right? But could you have traded it is the question. And I would suggest that game changer bars would give you a very, very strong advantage. There's your double bottom, and there's your higher low. So what we now need to work out is, can we trade game changer bars, or will game changer bars get us in the game? Well, if you take that on trust, that's your higher low, you could trade that bar, because going in the opposite direction, the low is lower than the previous bar, closed on or near its high. It doesn't have to be on its high, can be near its high. It doesn't have to be a green bar, can be a red bar, can be a purple bar, I don't care what it is. As long, pardon me, as the low is lower than the previous day and closed on or near its high, you can trade it. Stop loss here. My God, how many positions could you build here? Retracement. So in other words, and this is the key, the market has to be moving in the opposite direction to which you want to trade. That's why I call them a game changer bar. Yes, it's a key reversal bar, but it's changing the game. The game has gone south here. But you know that you've got a double bottom sitting here, you're now into trend long. So lower than the previous, closed on or near its high, trade it. Now the retracement. Let me go. Well, I can't go a bit tighter, I'll lose it. Lower than the previous day, closed on its high, trade it. Little retracement here, you probably wouldn't trade that. Back to here, that's a tiny little bar. If you're really clever, I'll have to go tighter. Sorry. As long as you're getting the picture here, guys, that you don't need to have a moving average crossover. You don't need to have a Fibonacci level. You don't need to have a whole bunch of things lining up with this game changer stuff. All you need to have is a directional bias, which is longer term than 30 minutes, right? So you have to have the pullback. Then you can see the game changer bar gives you the lower low, closed on or near its high, trade it. Same here, a little bit of retracement, lower low, closed near its high. Okay, it's not on its high, it's a red bar. You can trade it. That one you can't trade. Pull back there. That was the one I was looking at, that little one there. It's closed near its high. Okay, it's not on it, but it's near it. And if you miss that one, you got it on the next one. Closed near its high. And so on and so forth until you get a market change. And if you followed this all the way through, they're still there. They're all over the place. Look at them. Look at them. Incredible. So my point with all of that is that's why I look for game changer bars on the weekly chart. Now, is it tricky if you're in a range? You bet it is. And that's why I very, very seldom trade them, because I need to see a strong trend. And once I see a strong trend, a pullback or retracement, and then I see a game changer bar. That's why I call it a game changer bar, because it's changing that retracement into trend. And I think if you go back and have a look at those, back test them if you want, or forward test them if you want, I think you'll find that they'll put you in good stead in a trend in particular. Right, guys, I have gone over time. Surprise, surprise. I just keep on talking, don't I? My apologies for that. And I hope you gleaned something out of that and understand now why I'm looking for game changer bars. You got my watch list for the week. It's Aussie CAD, pound versus the dollar, and Kiwi Swissy. I hope you have a great week ahead, and we look forward to your company with Trading Buddies tomorrow. You're very welcome, Richard, and everyone else Have a great week ahead. Bye-bye.